Hi friends, Simon here from InformedTrades.com. Today's Thursday, August 14th, 2014. Time for our daily Forex chart review. Basically in these sessions each day I share the trades I'm placing, adjustments to existing positions that I have on in the markets, all as part of helping traders learn. You can learn from my successes, learn from my mistakes. These are live trades as verified by myfxbook.com. You can see my entire live trading history over on Informed Trades as well. If any of the information I'm presenting is unfamiliar to you or you want to explore other styles of trading, other markets, we have a huge learning section on Informed Trades, covering many styles, many markets. Check it out. Share your knowledge. Ask questions. We can all learn together. Let's get started with a look at the charts. Okay, right now on the screen is a chart of gold. We are now, looks like, well, yesterday, let's zoom in a little here. Shoot. That was not what I intended to do. I moved the rectangle let's move the rectangle back. Right around here or so. Okay, so yesterday we did close above the 200 exponential moving average, and it looks like today, today's an update so far. We haven't, candle hasn't closed yet. But if that's the case, then we'll have 2 days in a row where we are above the 200 exponential moving average. Now, we did have two bearish candlesticks at the 200 exponential moving average, or I interpreted these candles as bearish. However, now that we've closed above the 200 exponential moving average, you can make an argument that it's bullish. We're still in this range. I think either way, some may want to trade a range between 1310, although we're above that, and 1300. I think a safer range to trade would be 1280 to 1330, the top and bottom of this rectangle, or depends on how you draw the bottom of the rectangle, but definitely this support at 1280 to resistance at 1330. Of course, I'm looking at this from the long-term perspective. As I mentioned, I do think now may be the time that gold is really ready to take off, resume its uptrend, and head on to the 2011 highs of 1920 and higher. So from that perspective, and for those willing to hold for a longer duration, several years, possibly more, I think gold's worth accumulating, and that's sort of where I'm at and the rationale that I'm coming from in buying now and over the past few months, past few years also. So that's basically it with gold. Bigger picture is we're still in this range. I don't think it gets really interesting until we can emphatically break out. I thought we may have had a breakout here, July 10th, but then we just came right back down. July 12th. So we'll see. But so long as we're in 1270 to 1330, I think it's basically range bound. That's gold. Going on to Bitcoin. Okay, another huge down day in Bitcoin. Wow. So 1, 2, 3, 4 down days in a row. This one's pretty substantive. My position, I got long at 522. It is now a floating loss. It was a floating gain for a while. However, I'm in this, again, for the long term, a little bit similar to gold, but far more speculative, of course. I only have a really small position. I'm willing to risk it entirely. So if Bitcoin goes to zero, I'll be okay, or I accept that risk. Obviously not preferred to see any assets that you hold close out for a loss, but it is a small position. And on the flip side, I'm holding out for a 10 times return. Now, which would mean a Bitcoin price of 5,300, 5250, 5230 actually. But now the trend is clearly bearish for the short-term traders who want to look at the technicals. I think it'd be really interesting. Well, let's see when the bleeding stops. But if we get a little bit of a reversal, I think that'd be a great time to short. The trend is now clearly down. I mean, we have this trend line here. I can actually delete this AB equals CD pattern. We have this trend line. We're below the 50 and the 200 exponential moving average. If we snap back to this trend line or to 567, where we have the 200 exponential moving average and a established resistance level, previous to support, I think that could be a really interesting level to short from. So the trend is definitely bearish there. Okay, now moving on to the Forex trades that I have on. Euro Kiwi, this is, this wick here is a little ominous for the bears. The candle hasn't closed yet, so it might just be intraday noise, volatility going on. But 2 nice red candles in a row, so that's reassuring and has given my trade a little bit, put it in the profit, floating profit. Of course, I'm not going to de-risk the trade until we at least reach 56.76. So until then, I'll sit tight. Obviously I want price to get there, and then I can move my stop, this red line, down to here, this break even. And that level to de-risk is basically I'm looking for a support or resistance level that's between where I entered and my target profit, and that happens to be right here. So if price can clear this level, then I can move my stop. I can, breathe a little bit more, take my stop, move it down to here, and the trade has been de-risked. Okay, so that's Euro Kiwi. Dollar Singapore. This trade has not gotten filled, and I'm actually going to cancel it. It's a pending order, but we talked about this. Over the past couple days. When you see a beautiful wick like this, sometimes my entry order was, I saw this wick and I put an entry order to go short at 25.32. We just didn't get the pullback, right? Price never got to 25.32, it just went straight down. So sometimes when you see a beautiful, excuse me, reversal candlestick like this, I think the lesson for me is, to at least, and be selective about it, because I used to always enter half on market order, half on entry order. That's kind of inefficient, I've learned. But in some instances like this, I think it may make sense. So anyway, I'm canceling this order. It's train left without me. That's not as much fun as if I had been on that trade, of course. But that's life. At least I think I've learned a lesson from that. Okay, dollar Singapore. Cancel that and remove my watch list. These charts, by the way, are tradingview.com. I really enjoy those charts. Highly recommend them. I think they're pretty awesome. Okay, Kiwi Yen. Here we are. This is another trade. This trade's working out well for me. I am long Kiwi Yen. And you can see I got long at 86.30. My stop is at 86.45. My target profit 89.65. So now we're just looking for the level to de-risk. There we go. Okay, and I think that's going to be basically right here. I think you can see this level was a previous support level. We had some price bounced off here. So I'm going to interpret that indefinitely here recently, in early August. So we can clear 86.26. I think that will be where I move my stop from here to break even. Other than that, or until then, if that happens, it's just a matter of sitting and waiting. So that's and we looked at Euro Kiwi, we looked at Kiwi Yen. Both those, I was speculating the Kiwi would rally, and that's sort of working out well. So those two trades are good for my account, getting almost that break even now, floating value. Of course, those trades are far from done. We'll see what happens and how they pan out. Okay, now the new order I put on today, and this of course hasn't gotten filled yet. We are currently 28 pips away from it being filled. Is this one, Canada Swiss? So after today's down candle, or we see the down candle in progress, I decided to put a short order here at 83.18. My stop is at 83.58. And the rationale here is that we have the 50 simple moving average and 200 exponential moving average really close. Price is below both of them. The 50 in turn is below the 200 exponential moving average. So these are the signs we want to see in a downtrend. At the same time, we have pulled back a little bit, right? So if here's the swing high and here's the swing low, we actually might put that there. We have pulled back a little bit to almost 50%. Depends on where you measure it. You might say actually 50% retracement has occurred. But this level, 83.18, is pretty close to the 50% mark. And again, like I mentioned, depends on how you measure it. It could be at the 50% mark. But with those factors, decent pullback. This level is also established. It was established a bit here, right? One could argue here even a little more. So based on we have a support resistance level that's established. We have the 50 simple and 200 exponential moving average right there as well, and we have a pullback, right? Prices snapped back a little bit. All those are signs I look for to enter. I think the trend is short, and I think this could be the beginning of a larger move down for Canada Swiss. We'll see. At least that's sort of the order that I have on. Let's see if it gets filled, of course. I was considering Canada Yen, but I don't really want to speculate. I've got this long Kiwi Yen position too, and that's a little contradictory to Canada Yen. So I didn't want to really put that on. I thought let me speculate on the short side of Canada Swiss instead, rather than having contradictory yen positions. And that's sort of about it from in terms of my trading and where I stand. Any questions you have, anything you want to add, join us at Informed Trades. Best of luck in your trading, and we'll see you tomorrow. Take care.